The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading, and we got a mixed market so far this morning. We got some earnings this morning. We got some earnings this afternoon as well. We got the S&Ps right now, negative by 3 points, trading at 44.72. Quite the sell-off to finish the day yesterday. You take a look at the last 45 minutes, you're talking about 50-plus points in the S&Ps. You finish near session lows, not near session lows. Basically near session lows. You see the spike down to 44.62, and just in the last few hours, we've just kind of been chopping around at the lows that we made last night near the close, 44.72, right where we were in those S&Ps, negative by 3 points on the session. NASDAQ 100, negative by about 34 points right now, 14,525. You get the Dow, the only major index in the positive right now, back above 35,045. Russell, negative by 1 right now at 2,006. We jumped to Bitcoin, quite the surge Bitcoin from Friday to Monday. You trade to 45,605. You see why they love to trade crypto, folks, even in what is probably the least volatile crypto of all, Bitcoin. You trade from 36,000 to 45,000. You're talking about adding $9,000 to the price of your Bitcoin, 9,000 plus, actually $9,300 and change. You're talking about 26%, 27%, just off the top of my head, something like that from early Friday to where you were on Monday. Bitcoin backing off a bit from those high levels we made yesterday. You get the gold contract making session highs right now. Gold's up $3. Gold from Friday as well. You see the volatility on the jobs number. We make a high of almost 1825 yesterday, right towards the end of the day, 230-ish. We're trading right at that level right now in gold. You check out the crude contract, backing off a bit. Crude trading lower, even on about 5 a.m. You see that drop off, almost $2 from 91 down to 89.01. And now we're trading $90.18. And we jump to the all-important notes and bonds as we got a little bit of lower price and higher yield, down another 10 ticks right now on the 10-year. Yields rising on their way to 2%. Seems all but a short. All right, what are we going to start things off with? Let's start it off with Peloton. Pretty interesting action out there on Peloton. I know I have the article up here somewhere, but either way, you got the CEO. He is stepping down, becoming chairman. Excuse me. They're getting rid of 2,800 jobs, and they are bringing in the CFO from Spotify and Netflix. He was the previous CFO of those two companies. What's interesting here is one of the activist investors that have been pushing for the sale of Peloton, pushing that they might be able to get upwards of $75 if you sell it to a company, technology company based in subscriptions, two of the biggest out there, Spotify and Netflix. So bringing in a former C-suite executive from those two companies in particular, maybe that helps grease the wheels as you look at maybe the attractiveness of a company like Peloton. Now, we talked about it yesterday. You're talking about a company. They have, are they already out with the earnings? Yes, they are. So they're already out. Yeah, before the market. Pretty sure they're out with their earnings. We'll pull it up. I was reading all about just the executive stepping down. But you're up to 30.50. You're positive a bit. Now, thought I had it up here. I'll pull it up after the break when we talk about it. But you're talking about a company right now, when you get into the fundamentals, $10 billion right now. So even if you push this thing up to $75, you're talking about $25 billion to have the whole company. You can see how at that price tag, when you're talking about a company, Apple valued at $3 trillion. You're talking about a company, Spotify would be a different story completely, but even a company like Amazon, right? Valued at about $1.7 trillion. The attractiveness of a company like Amazon picking up Peloton, keeping people in the fold for their Prime membership, especially when they're raising those prices for Prime. Interesting to see how that one's going to develop. Excuse me, folks. Still getting over a little bit of a cough, shaking this thing out. Okay. And let's jump around to see what else we got going on. We got Pfizer out with their numbers missing on forecast for COVID product sales. COVID vaccine and pill sales, each seen missing analyst estimates. The company CEO outlined the strategy for outbreak's endemic phase on there. They only make, for the adjusted year, they're talking about seeing 635 to 655. Market was looking for 665. Revenue is going to top out at 102 billion. Market was looking for about 106 billion. The 100 billion plus target, that's going to be a record even if they come into that. Drug maker generated 81.3 billion in revenue of 2021. I mean, that's a rise of like 25%. But it's been quite a banner year, half of which came from the COVID vaccine and the pill. Through late January, Pfizer said it had clinched 32 billion in 2022 contracts for the vaccine. In 2022, 22 billion, lots of twos flying around, 32 in 2022 and 22 billion for the COVID pill. Paxlovid, analysts were looking for 34 billion, okay, for the vaccine and 25 billion for the pill. So you're talking about a miss. I mean, combined, you're talking about they were looking for 59 billion. It comes in at 54 billion. Almost a 9% miss there. The disconnect here, it's going to talk about that they're trading lower on that disconnect. There you go. From $54 down to $51 Pfizer. You take a look at the longer term chart on Pfizer, you're going to open basically back down right near lows that we were trading at a couple weeks ago. Interesting that that's going to correlate to the highs we made back in August. $50, nice round number. We'll see how Pfizer opens this morning. All right, jumping around what else I have going on. There's a few different articles I want to pull up here. Before we get to the general consensus in the market, let's talk about real quick. We'll jump to commodities. Let's talk about this one because it talks about the VIX. We're going to be talking to our man Kevin Hincks coming up next from Fast Market, TD Ameritrade Network. JP Morgan sees surefire sign it's time to buy stocks. Now, I was talking a little bit about this yesterday because I believe this is combining a note that they had, but strategists are looking for what they see, and don't even buy that one. Near bulletproof indicator, near. If there's such a thing as bulletproof, folks, stay away from it. If you are ever receiving, quick lesson, if you're ever receiving a yield that is above the guaranteed government yield that you're talking about, whether it's a 10-year, right, whether it's a money market overnight rate, if you're receiving any type of yield above the guaranteed governmental rate, you are risking capital. If you weren't, there'd be a flow of capital into that money if it was risk-free. The only reason you're achieving a rate over that is because there is risk. But this is talking about when the CBOE volatility index, the VIX, rises by more than 50% of its 1 month moving average, which it last did January 25th. The indicator has proven 100% accurate outside of recessions. Here's the key. How do you know you're outside of a recession until it's after the fact? Okay? So yes, if you are outside of a recession and you get a VIX spike like that, it shouldn't be rocket science, folks, that if you're getting a volatility index spike and the economy is doing well, that usually means there's fear in the market, there's exacerbated selling during a strong economy. Shouldn't be surprising that that would be a buying opportunity. You might be seeing that, right? Market freaks out. It freaks out over rate hikes. The chairman himself has said the economy is so strong, it's going to be able to handle those rate hikes. We'll see if that plays out. But nonetheless, you got the VIX this morning trading at 2283. We put this thing on that is a 3-year weekly. We zoom in on the action. You see up to 3894 was that spike they're talking about. Stay tuned, folks. We had a lot to cover. I'll be right back with Kevin Hincks.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&P's negative 6 points right now. We got about 12 minutes to go until the opening bell. Checking out Peloton shares right now. You got Peloton up about 75 cents on a weekly basis. You talk about pullback, folks. You can barely even see that the pop that we got from Friday action until yesterday. You're up 33%. You're up 33%. Percentages on small numbers can be deceiving sometimes. I talk about that often, and that can be deceiving. When you hear yesterday Peloton's up 33%, right? Well, that's fantastic if you happen to buy the lows, folks, but very few investors achieving gains on this equity, trading at $29.75. Now, jumping over to the headline that I wanted to pull up here. So you have their CEO stepping down. He's going to be replaced by former Spotify CFO Barry McCarthy. I believe he was in that same role for Netflix prior as well. They cut the forecast for full-year revenue and subscribers. He is the John Foley, CEO. He's going to step down and become executive chairman. Okay, they're going to 2,800 global jobs would be cut. That's 20% of their corporate positions at the same time. They talk about how the stock has tumbled in here dramatically. Now, he's going to join the board of directors, and Peloton said President William Lynch will transition to become non-executive director. Now, this was the activist investor firm. Really remarkable how little of a company sometimes you have to control to get things going. Blackwell's Capital, under 5%, and they are still not happy that he's going to be executive chairman. Foley has proven not suited to lead Peloton. It's going to be interesting how this thing unfolds, folks, because they're looking for potentially $75 a share in a strategic buyer such as Netflix and Spotify, where their new CEO worked in the C-suite as well. Interesting stuff. Let's jump over to our man, Kevin Hincks. Every trading day, folks, noon Eastern time, Kevin Hincks, Tom White, the team at TD Ameritrade Network, breaking down the day's market action. We got earnings this week. We got the inflationary data coming out on Thursday. We have the markets in a little bit of volatility. We got the VIX above 20. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, get ready. Embrace the chop, Tommy, because the market seems failing rallies and failing sell-offs. And, all that leads to a market that no real damage, but certainly some ups and downs during the day. So that's kind of, I like to try, Tommy, to establish a personality for a market. And it certainly looks like volatility and movement is what's here right now. I mean, Peloton already this morning, what a huge range it's already had. Down to 25.5, now back up over 30, actually up on the day. So, listen, I think Peloton is a really fascinating company because it, I thought Mike Folio did an incredible job of going over Peloton yesterday on the show, making a case for why this is still a good, viable company, making adjustments and moving forward. And so, yeah, I think it's going to be really interesting, Tommy. $75 a share? Ooh, I don't know if they'll get that. We'll see, but don't rule out anything. This is still a company that demands a lot of interest from people.
It is interesting, man, how they get down to the single-digit billions, talking about $8 billion market cap-wise before some of this acceleration having to do with the potential for some suitors coming in there. But if you just start thinking about it, Kevin, in terms of big picture, right? You got some of these large tech companies, Netflix, you got Amazon was in the mix, getting written about this weekend, just possibly exploring. If they could find any value, and it seems like you can find some value with a company like you're talking about, like Peloton, maybe not the multiples that they were talking about at $170 plus, but you're talking about $10 billion. You're talking about, even if they push $75, only $25 billion for the whole company. For a company like Prime that's up in their Prime membership, maybe you include it there. For a company like Netflix that's always trying to attract subscribers, etc. It's just interesting to think about that conversation. And when you put it in that light, some of those tech companies, man, $10 or $20 billion, it's almost remarkable to come out of my mouth, but not that much money if it provides some of the value. That's going to be an interesting one, man. $75, like you said, I don't know. Doesn't seem like Amazon might come in when that stock's trading at 23 and tell them that they're going to buy it for 75. But hey, we're going to find out, right? That's the best part of this. So we have other companies with earnings out there already, Kevin. We're coming into a big day of earnings this week. We're looking for inflation. But I'm going to ask you a little bit about Facebook because it just keeps dropping, Kevin. Pretty interesting here. I'm even chatting with my friends who are not professional traders, but in the market, always looking to manage their own portfolios. The conversation has begun on the multiples, and there's almost two camps here, that it's going lower or the multiples are just getting pretty saucy at these levels here. What's your take on Facebook, man, as the bottom doesn't seem to be in just yet? Or is it?
Facebook is a unique story because they are unpopular in most conversation circles, except they're kind of like that company that everyone likes to say they don't go on, but everyone goes on. And their advertising, what they offer advertisers is so incredibly unique. Have they maybe taken their eye off the ball a little bit, looking to the metaverse when they should be still focusing on their core business? Probably. They have managed to anger both sides of the political aisle, which is hard to do. So this is a company that now, Tommy, though, here's the thing. Do they make money? The answer is yes, and lots of it. They now have a 16 PE. 16. So you can't deny that at the end of the day, a company should be valued on what they make, how much money they make, and their free cash flow. And Facebook has free cash flow, and this is a company that has always been, on the tops of politicians' lists. And remember something, it always makes me laugh when news outlets and financial news, when they report on Facebook negatively. Remember, in terms of advertising, Facebook's their competitor. So
that's a great point.
They love to bash Facebook. But that being said, advertisers love Facebook because you have such direct penetration to the target market that you're aiming for. And that's why Facebook at some point will recover and resume and go back higher. I think it's a great buy down here. That's just my opinion, but I'll certainly be trading it down here, Tommy.
It's a great answer for almost an impossible question, man. It's on my mind just because just the move is so remarkable still. I mean, yesterday you were opening at almost 240, about 238. You had a 238 print within the first few minutes, and you get a 219 print this morning. I don't think a lot of people thought Facebook had $20 to the downside when it opened yesterday. So just intriguing to see the type of volatility. I think it's because of the conversation you're having right now, the conversation I'm having with friends, just about how volatile, just trying to make an assumption of where they go in the future and all that they're dealing with. Now I'm seeing headlines that they might pull out of Europe. Don't imagine that's going to happen, but just a lot going on, to put it lightly. Well, Kevin, real quick, we got about 30 seconds. What are you guys going to be talking about coming up at noon today?
3 really good names today, Tommy. One that will surprise you a little bit. We're going to trade Lyft.
Nice.
And what's got earnings. We're going to trade Chipotle. And then we're going to look at Facebook post-earnings and trade that in the final segment.
Look at that, folks. We love it. All right, Kevin. We look forward to the program as always, man. We'll be watching at noon today. Have a great program, man.
Thanks for having me out, Tommy.
Always a pleasure. We'll be right back, folks, for the Open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading market and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&P right now negative by just 1 point. You get the Dow catching a bit up 112. You get the NASDAQ 100 negative by 42 points. Let's jump over to some of the stocks with some action this morning. We got Peloton shares up 1.5% right now. You have GM down 3.8% right now. We jump over to Pfizer with their numbers down 5.15% right now. Jumping around to some of the articles I had pulled up here. So it's interesting how many articles I'm seeing popping up with analysts with completely different diverging perspectives, right? This is talking about hedging. Hedging this much usually precedes U.S. stock gains, a gauge of the extent to which investors seek protection via methods like raising cash or buying put options has risen to the highest level since April of 2020. Remember April of 2020? Put buying has been elevated among both small and large traders. And you look in terms of that equity hedging trading. Let me see if I can expand that one out to get a little bit broader. Come on, cooperate. Come on. I think, am I, hopefully you're hearing me. My charts are stuck a little bit. Well, nonetheless, so you have that article there, okay, talking about hedging, puts, etc., excessive optimism, excessive pessimism. Now you jump to the next one. All good. Okay, I'm just... mounting risks for S&P 500 are under the surface. This is a negative article. Liquidity on S&P 500 futures near record lows of 2020 sell-off. Fed less likely to rescue stocks as more focused on inflation. So there's your bear case, right? You got all the cases, folks. You have to make the decision. As Kevin Hincks put it, we got a two-way market. I would stay agile, stay nimble. Don't be afraid to use stops, because this is a market that you can almost be a bull or a bear. And if you manage your risk appropriately, you might be able to make money. Now they're talking about here, and I've heard this number thrown around before. You're talking about a Fed right now that would need basically, where's the number? There we go. This time around, the Fed might not step in to support the stock market until a drop of 15% or lower from current levels. Now, you might even go lower than that, folks, because it doesn't seem fair, okay? And fair is not a good word, because life ain't fair sometimes, and the market especially ain't fair sometimes. But it wouldn't seem fair. So what's 15% right now? You're talking about, we're trading at about 4,500, 450 points is about 10%. So you talk about 675, we'll call it 700 points. 700 points brings us down to about 3,800, okay? We drop down to about 3,800, the Fed gets a little worried. Folks, all that would do would bring us back to an even year of 2021 after surging from 3,200. So you're telling me that the Fed is not okay with the S&P trading from 3,200 to 3,800 over the period of 2 years during an active pandemic? They're not okay with that? How are you not okay with that? I would be okay with the S&P trading from 3,200 to 3,800 during a period of remarkable economic turmoil. Are they not okay with it to the point that they will resist raising rates and risk inflation if the S&P goes under 3,800? I don't know that's the case. It's going to get a little dicey if markets get down there. That's the truth. But keep that in mind. Keep in mind how far we've risen. Keep in mind the multiples some of these companies are dealing with. I mean, let alone, folks, do you remember the Christmas sell-off in 2018? You were trading at 2,400. 2,400 towards the end of 2018. We kicked off 2019 at about 2,400 in the S&Ps. We dropped 15% from where we are right now, and we'll be trading at 3,800 on the S&Ps, and we'll be risking 7% inflation. You get the point. We are in a really unique situation here, and the Fed just might bring it, man. They might bring it in dramatic fashion and reset some of these market multiples that might not be fair, to put it the other way. I'm saying it kind of tongue-in-cheek, folks, but I hope you get the point, because we are at some lofty levels here. Those companies, the FANG stocks, they are making money hand over fist. There's no doubt about it. We do have a strong economy. It can probably handle the market turmoil if we have rates going crazy, but I don't think that the Fed is going to be that worried if you start talking about 4,000 on the S&P. I don't. So we'll go from there. All right, let's jump around to what else we got going on. There's your risks. Stocks making moves. Let's go down the list. We talked about Peloton. Novavax, they are lower in the pre-market after reported that they've delivered only a small fraction of the 2 billion COVID-19 vaccine doses they plan to send around the world. Not what you want to hear, unfortunately. Novavax shares, yeah, they're down 11% on that news. There's a drop out of bed from 97 to about 85 this morning. Harley Davidson's out with their numbers, trading higher. Unexpected profit for the latest quarter, as well as better than expected revenue, 14 cents a share. Market was looking for a 38-cent loss. Demand jumped for its more expensive motorcycles. Seems like premium is the way place to be. You got Harley Davidson up 8% today. I was reading an article this weekend talking about Chanel raising the price of their bags. I'm going to see if I can find it during the break. because basically what they were saying, as my phone rings, we'll hang that up, is that they are able to raise, all right, I'm going to pull it up. They're able to raise their price from $5,000 to $8,000. I was not aware that Chanel, I thank goodness I was not aware of how much pocketbooks cost for a Chanel pocketbook. They're beautiful. I do like them. I'm not willing to pay $8,000 for a handbag, thankfully. But the point was, the article talked about Chanel has raised their standard bag price from $5,200 to $8,200, and they have not seen waning demand at all. When you talk about the luxury area, you talk about higher priced items, whether it's because the market's on fire, whether it's because the wealthiest individuals of us all are doing better than the poorest, right? That wealth gap just even expanding even more, whether it's the rise in real estate prices. I mean, you think about it, the top 10% of the country, right? Where's your money? It's in real estate and it's in the stock market, and both of them are through the roof. Real estate especially, I say especially. Market went up 27% last year. Remarkable prices, and you're seeing it in Hog as well. They're selling those expensive bikes up 7.4% for Harley Davidson shares. And I'm going to find that Chanel article. We'll talk about it after the break because it's staggering. I was not aware. And then my friends introduced me to some other bag makers in the luxury sector. Kind of blew my mind away. I guess you haven't reached high society until you've paid about $400,000 for a crocodile bag. I kid. But there's always a bag that you want to spend more money on somehow if you got the money. In NVIDIA. So it's going to be interesting here. I had an article up here about NVIDIA talking about SoftBank. They're moving on. They're going to pitch the ARM IPO as NVIDIA gives up on the deal. So NVIDIA was going to pay $40 billion for that IPO. One of the points that the article makes in here is that it's going to be tough to justify that type of valuation for the market because it accelerated so higher. NVIDIA deal, this is the part here I just wanted to touch on because this thing will come to public. You'll be thinking about the $40 billion valuation that they had, valued at about $40 billion when announced in 2020, but that valuation surged by tens of billions of dollars with the bidder stock price. SoftBank is likely to struggle in landing a similar valuation in an IPO. So that'll be interesting to see how it plays out. You're talking about in about a year, aiming for the IPO in the fiscal year ending March 2023. That'll be interesting to see how it shakes out, but NVIDIA probably not going to get that done. They were facing some regulatory battles across the board there. In NVIDIA, longer term, 3-year weekly, quite a pullback. Let me back off some of these. I was looking for a little confluence of two different trends here. Didn't quite match up really what you're talking about. I always love to see when the 382 and the 618 come up, folks, okay? And it did kind of come down. You look where we were from the COVID lows of NVIDIA at 45, and then you take where this run began in March of last year. You could probably say it began in maybe May. But the 382 to the 618, you're talking about an area of 228 to 202, and you just came down to a price of 208. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, we got the S&Ps negative 3 points right now. Checking out on the action, a little bit of volatility on the opening bell, almost up to 44.80. We're sitting right now at 44.72. They're talking about in the Tiger's Den, maybe rightfully so. Market may want to wait until Thursday for CPI data. We got a long way, though. You're talking about almost 2.5 trading days. No, 2 trading days. We get that number Thursday pre-market, so you'll have 2 full trading days. We'll see if we wait. The market wasn't waiting yesterday, man, on that sell-off. As you drop 50 points in the last 45 minutes of trading, we're sitting right near the lows of 44.72 right now. Now, I was talking about that Chanel article, so check this out. Journal article out Friday? No, yes. What's that? Saturday, right? Saturday morning, yeah. So Chanel's small classic flat bag. All right, I think that's this one they're talking about up here. You've all maybe seen it. It's a nice bag. I like Chanel. I like the brand. I like the logo, the emblem. I like everything they got going on, except for the $8,200 price tag. Always a luxury item, but after 3 price hikes last year, it's selling for $8,200. That's up from $5,200 in 2019. The French fashion house has been raising prices at a faster pace than other luxury brands, prompting an outcry from some shoppers and testing their willingness to pay. But here's where we go. Yeah, they're saying it's prices of raw materials, okay, but they have not seen waning demand at all. And maybe I'm going to struggle to find where it says that in here, folks. People are shocked, not sure by the number of times Chanel is raising prices, but also by the amount. Well, guess what? It doesn't matter if they're shocked if they're selling the same amount of bags, folks. Yeah. So it's just constant quotes in here, folks, from people talking about we expect price increases of a couple $100, but to go up $2,000 in 6 months. I mean, folks, if people are paying it, they had it here. I'm going to have to find it at the break again. Yeah, I mean, here as you start to get into it. As much as some people are upset at Chanel's price increases, they are still buying. As the price goes up, it becomes unattainable for some, but the core customers won't be priced out. If you're selling a product for 60% extra, and a lot of that is going to go to the bottom line, you don't have to sell as many bags. And if you're selling even close to as many bags, you're probably making a lot more money. Privately held, reports financial results once a year. Sales from the most recently reported year, which ended December 2020, fell 18% to $10.1 billion. Okay, so they're raising those prices to keep up. But boy, when you look at it, okay, last part of this article I want to look at here, this graph right here is talking about each of their bags. You had the small flap, went from 5,200 to 8,200. Come on, get out of there. Come on. You have the classic one that goes from 5,800 to 8,800. The jumbo goes from 6,400. These prices are making my head scratch. to, come on, just shy of 10 grand. This auto, it's not keeping up with me. Maybe that'll help. 9,500, and the classic maxi flap goes from 6,900 to pushing probably close to 10 grand. 10 grand on the dot. Remarkable. Now, here's what I'll say as well. I got a lesson in bags from my friends. A Birkin bag. Was not aware of Birkin bags. I am now, and this is what I was joking about, folks. Just Google Birkin bag. I discovered it's a brand. Hermes is selling them, and I joked, you haven't reached high society unless you're paying $480,000 for a crocodile handbag, folks. I hope you know I'm joking, because anybody doing that, no matter how much money I have, folks, I ain't going to be paying 480 grand, and I'm not going to be paying 22 grand at Walmart either for an ostrich leather orange Hermes Birkin bag. But the Chanel article, that one's a little huge. Chanel article, pay attention to that Chanel article, man. Prices, they are going up. And you're going to see, especially on the luxury side, Harley Davidson made me think about it. They come out, they're selling their higher priced items. They're selling more of them. They're up 10% today. All of these companies are probably going to start pushing the higher end products to the upside. If I was an executive selling higher priced retail goods in any fashion, I would begin testing what my price raises do and whether I actually see the waning demand that you might anticipate. Yes, you're going to see an uproar, justifiably so. Maybe somebody was able to rationalize spending $5,200 on a bag. Maybe you were able to get one used for $2 or $3 grand. That doesn't seem as outlandish. $8,200 right now. But guess what? That don't matter. Maybe they're just not going to be as affordable anymore because the company's able to sell them at those prices. Remarkable nonetheless, that's for sure. Okay, jumping down to what else we got going on. Jumping down to companies with their earnings. So Kevin Hincks talked about it. We get Lyft earnings tonight after the bell. We also get Chipotle Mexican Grill. So we're going to jump over to those two real quick. You'll see Uber, of course, move on the Lyft earnings. They're getting a little bit of a pop, up 1.4%, up to 39. Talking about a 15% move priced into earnings, folks. And this is where you want to understand volatility premium. I see a 15% move priced into options, and immediately I say, I don't want to be the one buying and paying that type of volatility premium, because if I need to make 15% up just to break even if you go directionally, you need to make a 7.5% move just to break even. That's a conviction I definitely don't have at this time on Lyft. You jump over to an at the money, put or a call, okay, and you're talking about $3 almost, right, on either side of that equity. You jump over to Chipotle Mexican Grill, and you're talking about 10%. Big numbers priced into these equities, folks. The other side of that is you can be the one selling that volatility premium. I encourage you to check out Fast Market at 12 noon Eastern time. TD Ameritrade, they are a sponsor, folks. I love Thinkorswim. I tell people in my personal life that they're a sponsor, but I'd use them anyway. I would. And I know I'm biased. I know it comes with that bias, but I would, because of the tools and the ability to look at the type of action I'm talking about here with a move of $153. Now you have, let's size this down a little bit for less options. You have Chipotle trading about $14.50. There you go. You're talking about $70 in either direction. Now the other side of it is you can be the one selling that volatility premium, folks. And when I see moves of 10 to 15%, that's usually where my mind goes in terms of selling volatility premium. We'll see. I don't know if I have any trades planned. We'll see. But that's the way my mind thinks when I see numbers that big. All right, what else we have coming out? Chipotle and Lyft are the two big ones after the market. Tomorrow, we're going to get Uber and Disney, along with O'Reilly Automotive. We get Equifax. We have Sonos. We have MGM Resorts after the bell tomorrow. On Thursday, you get Coca-Cola early, pre-market. You got Pepsi at the same time. Kellogg's, PG&E before the market open. And Thursday, after the market, Expedia, Zillow Group, GoDaddy. Friday, pre-market, a couple companies. The only one really that comes to mind, Under Armour, UAA, is going to be out on Friday. Jumping over to the earnings tab, you jump to analyze on the Thinkorswim platform, then to earnings. Yeah, they'll be out February 11th. And there's a move for you as well. Under Armour, a $20 stock, $19.60. Options pricing in a $3.50 move. That is a hefty premium on this equity. You see the volatility, though. This thing just traded from 27 down to 17.50, right near the lows that we had for the better part of 2021, and almost right where we started. pandemic off in 2020. And as I've been talking, this market losing a little bit of steam right now with the S&Ps negative by 9 points, NASDAQ negative by 28, the Dow positive by 70. Let's see how some of the big dogs are trading. Tesla is flat right now. Amazon down 1% right now. Microsoft down 0.2. Apple shares flat. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of GM up here. We got GM down 5.5% right now, jumping over. GM shares tumble after Morgan Stanley downgrades the stock on EVs and 2022 guidance, well below the forecast, as well as concerns over the pace of the automaker's EV transition. Lower the price target of 55 from 75. You closed yesterday at about 51. You're trading this morning at 48. GM, they trade lower on that. Guidance not what you want to see in terms of that type of a miss. Operating profit between 13 and 15 billion, 625 to 725, and net income of 9.4 to 10.8. So strong numbers in there. And they got big plans, but Morgan Stanley saying not coming maybe quick enough. Last article I want to touch on for the morning. American Express launches its first digital checking account for rewards-hungry consumers. The car company on Tuesday launched Amex Rewards Checking to its U.S. customers. Any non-business card member in good standing is eligible for the no-fee account, according to Amex General Manager for Consumer Banking. Consumers who enjoy racking up points on transactions can use the account's debit card to earn 1 reward point for every $2 spent, as well as a 0.5% annual yield on balances. Not a bad annual yield when you think about where we are. You jump over to American Express, up 0.3%. Not really sure it's having to do with that, but this stock has been quite a rise. You kick off 2021 at about $120. We're trading right now at $189, and you are basically pushing all-time highs. Is that today? That's an all-time high today for American Express. It is a good time to be a payment processor, man. Electronics payments. We take a look at Visa, just off the highs that we had last year of 252, just off. We're trading at 226, but man, you look at that trend. The trend is higher for payment processors. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. Larry Pesavento, live at 11. Talking about Chipotle Mexican companies after the bell today. They'll be talking Facebook as well. I'm going to check that one out. We got Steve Rhodes live at 1 o'clock, Dave White live at 2 o'clock, and Tom O'Brien might get live from 3 till 4, live all day at TFNN, folks. Thanks so much for starting your trading day with me. Stay tuned. Basil Chapman's live with the Tiger Technicians Hour. Have a great Tuesday, everybody.